In the metals quadrant, a pullback in the April gold futures contract. Gold has its first lower close and only its second negative change on the day in the last 11 sessions. So what do I mean by that? Well, today was the first day that gold closed lower than it opened, going all the way back to February 26th, which is 11 sessions. But on February 28th, we got a gap lower open that gold rallied from, but still closed lower than the previous day's settlement. So technically, this is the second session of lower closes versus the previous day's settlement in the last 11 sessions. And today was an impressive day down. See, we ended up on the low at about 2158.20, down 1.39%, closed a little bit more than 1.25% lower from yesterday's settlement of 2188.60. And then the high today, 2190.80, was only up 0.1%, so today was pretty much a straight down day. The reason for that early this morning, or at least for the extension of the move, was core CPI in the US as it came out higher than expected for the second consecutive month. The headline year-over-year core inflation rate came out at up 3.8%, which was higher than the plus 3.7% forecast, but still lower than the previous rate of plus 3.9%. But the month-over-month core remained unchanged at up 0.4%, but was stronger than the expectation of plus 0.3%. And that headline year-over-year beat expectations and was higher than last month's plus 3.1%, coming in at plus 3.2%, and the month-over-month headline reading was as expected, but 0.1% higher than last month. All of this caused U.S. interest rates to rise across the Treasury curve, with the 2-year up 8 basis points, the 5-year up 7, the 10-year up 6 at 4.16, and the 30-year yield up 5 basis points at 4.31, pushed the dollar higher, mainly against the yen. It was up 0.5% against the yen, about 1/3% against the New Zealand dollar, and about 0.2% against the sterling. And those inverse relationships helped the helped put pressure, I should say, on the precious metals, pushing gold lower by 1.25%.